Hello everybody, welcome to the TraderMerlin Show. Happy Monday out there. Holy cow, what a day. We saw some historic events happen today, which of course will be the topic du jour when I talk about the death of oil. We'll get to that here in just a little bit, but a little bit of housekeeping. I'll let you know kind of what's going to happen on today's show. I'm going to do a modified introduction to our top markets just because some of them weren't that noteworthy. Others were just like unbelievable and will be the remainder and the talk track for the show. Big shout out to everybody that's joining us today. The names are scrolling through so fast I can't even say hello to everybody. So you know I love you out there. Thank you guys so much for the chat and the communication going on in social media. I will do my best to read through, as I'm sure many of you have questions on how on earth what happened today is even possible. It's interesting once you understand the mechanics behind it on how it happened, and I'll get to that here in just a second. What else do I got for today? I think that'll kind of do it. We're just going to talk about oil, maybe go to some listener questions at the end if we have time. I'm probably not going to do a 1 hour show today. Sorry for those of you who got excited about our Friday show out there and all the great feedback I got on Friday's show. Maybe I should have a glass of whiskey more often. Also, notes for the show. Let's see. We have Bill Addis is going to be our guest on the show on Wednesday. As I mentioned on Friday's show, he has some new charts he showed me on Friday. I got to bring you back on and talk about these charts. So that'll be on Wednesday. And Bill Henner, who's an old, I hate to use the word old, but he's a long-time floor trader from out in Chicago. Just one of the nicest guys you'll ever meet. And he has such an unimposing demeanor. But from my conversations with other floor traders, he was just a mean SOB on the trading floors and got his job done. So we're going to talk with Bill Henner on Thursday. I may actually have another guest lined up for Tuesday or Friday, but we'll see how that one goes. I'm also going out to some other sources and maybe bring up some new people. So again, if you have people you would like me to interview, you can always go to TraderMerlin.com. Send it in there. Let me know who you want me to interview. If you got any connections or something that you want me to bring on the show, happy to do it. Love to get on different perspectives on the show as often as possible. I know, Cap, man. No 1 hour show, man. I might do it on Friday. Okay, so today is obviously 420, and as I'm seeing in the chat, yes, enjoy your greens out there today. Back when I was a consumer before my crazy anxiety and panic attacks, Northern Lights was probably my favorite, although Jack Herrera was also another crowd favorite. So enjoy. Happy 420, everybody out there. Let's go to start our show. We'll do it with I'm going to call it the market update, but it's really a modified update is what we're going to talk about today, simply because I don't want to spend all the time going through all 7 markets. Some of you have complained about it. Others say the 7 markets at the beginning is a great piece to the show, so I'm kind of torn on what to do. So I might create a hybrid and truncate it a little bit. So let me start off with our left side of the screen here. I'm going to go from the best down to the bottom, and it's kind of interesting how this all played out. You would think that gold would have done a little bit better today. Gold was number 1, up $13.30 a share, trading at $17.12 or now $13 and change. So not a huge move up. Obviously, a nice move for it. We'll go on to the daily here so you can see a little bit better perspective of where it's coming into and what it has done. All right, it's stopping that 4-day slide that it's had, still above that 1700 mark, which I think is very, very good. All right, well, happy anniversary out there, Nat. Congrats. Number 2 on our list, and now I'm going to have to switch over. I'm going to try to do a whole bunch of different visual graphics here today, and you guys know I'm doing it all myself. Let me go to, of course, I'm jumping the gun here. Oh, I ruined my show. Dang it. There we go. We'll start with this one. I want to do it this way just because it's one of those things that when you see it, you're going to be going, how the hell is this possible? So here is your NASDAQ, right? This is the NASDAQ composite. It was down, less than 1%, negative 0.98, an 85-point slide, dropping to 8,565. Again, normal day, no big deal. Now we move over here to your Russell 2000, which is down 1.25%, 15-point slide, 12.13. Again, no big deal. 1.25 points nowadays seems like just a drop in the bucket. Now you move into the S&P, which I closed out my short this morning, which was, I guess, good and bad. I got a little bit of profit on it, but I took some hits on my oil, that's for sure. 49-point slide, 1.73% drop on that one. You can see a lot of it happened near the tail end of the session here. 28.24 is where the S&P ended up. Now, I could jump out to Bitcoin, which is right around 68.93, down 4%, or the Treasury yields, which were down 4% as well, but those pale in comparisons. Watch the screen here. This is where you just got to go, huh? This has to be a typo. There's your crude oil. And this wasn't even at the low. You're thinking, how the hell can oil be down 199% on the day? Well, I took a screenshot a little bit later to make it kind of full screen, and this is from Yahoo Finance. You can see at this point, you had crude oil was down 223% on the day. That's negative $22 per barrel. To put that in perspective, I said it correctly, negative $22 a barrel. Now, for those that were paying attention today, it dropped below negative $40 a barrel. Let that sink in. That means that someone is literally going to pay you $40 to take a barrel of oil. Now, that to me seems a little bit strange out there, and a lot of people thinking it's because of the supply glut and the demand issues. That's a factor, and it really breaks down into three components. And that's what I'm going to address here today, or how I'm going to break it down on today's show, which is going to be this. Number one, we'll be looking at why oil is dropping, period. That's the main piece, which I think we all understand pretty well, and we shouldn't spend too much time there. Number two will be what we call the long squeeze. I know this sounds really weird. Don't worry, it's an adult show, but I'm not going to get into that kind of adult stuff. It's the long squeeze, which is you almost never, ever see it. That's the main reason you saw what happened today and potentially even tomorrow, because that crude oil contract, the CLK20, which you shouldn't even be trading anyway, guys. Last week, you should have switched over to CLM20. We can talk about that as well. This issue is that contract expires tomorrow, and we could see this short squeeze yet again. Then finally, we'll go into kind of what's the prospects or the future for it, because I have this ominous title over here which says "The Death of Oil." I don't know if it's the death of oil, but you know what? People like clickbait, and that kind of made a nice little clickbait heading. Thanks to my graphics design team for pulling this one together. This obviously my graphics design team is is me. So the death of oil. Where do we go from here? So let's start understanding it and talk about it. And I'm going to try to... Brendan says oil is worth nothing compared to Bitcoin. That might be true, but what's interesting about Bitcoin is you can't shove it in your gas tank and get your car to move. Yeah, just saying, there's a little bit of a different aspect there. So there is a utility to crude oil, but I will not go down that rabbit hole. So number one, let's talk about why oil is dropping. We've been talking about this on the show for quite some time. Number one is demand. Okay, we are in an unprecedented situation that we've never been in. Or let me rephrase that I have never been in. Some of you older folks may have had a situation where that happened. So what do we have? We have, all of a sudden, I would say 95% of us are heeding the advice of our governments, of our governors, and saying, look, let's shelter in place. Let's stay home. I've got my truck is a Toyota, I had a Tundra, I have a Tacoma now, a Toyota Tacoma. I get 15 miles a gallon. That thing is horrible on gas mileage. And I would probably spend maybe $100 a month on gas. You know how much I spent in the month of April? I filled it up one time, and I still have a full tank. I haven't really driven. I've driven to the store a couple times, driven to the beach, gone to Costco because I got to buy my Costco stuff and my dog food from my boy who's sleeping over there. But other than that, I'm not driving. I'm sure most of you are not driving as well. So this colossal lack of demand is impacting the price of crude oil. We know that. The issue is how long will it be? And I think that once we get this ban lifted and we can now move about the country, sorry, Southwest Airlines, we will all of a sudden start consuming oil again. So you have demand is down. Also, the airlines are a big factor in this one too. They're getting squeezed because no one's really flying. So that demand has dropped significantly. The other side of this is supply. Now, supply is kind of hitting us on multiple fronts. I wanted to show you this graphic, which I pulled up from, where did I get this one? I got this from Trading Economics, and this is 2019 data. If you look at this one, it talked about the top oil producers. And I love it because it showed the U.S. on top. A large portion of that was due to the U.S. fracking and shale industry, which obviously is taking a big hit. As I mentioned, you get down below $35 a barrel, not a lot of profit potential. So what's end up happening from a production standpoint is this. You have produced, and let's just take the U.S. for example, right? We could talk about Saudi Arabia and Russia later. You have the U.S., which if you get down below, let's say $35 a barrel, they're not making any money. So what happens is those companies go offline. They go bankrupt, they shut down, and you're going to see a lot more of these companies going bankrupt here in the near future unless this gets resolved quickly. So all of a sudden, you have that supply production stopping. So we have had a supply glut, right? There has been a lot more supply because Saudi Arabia, Russia, OPEC are continuing to produce, even though they said they're going to cut by 9 billion barrels, 9 million barrels a day. It's still a supply glut, but every day that we go through this, more and more U.S. factories are going offline, which means that us leading and going back to 12 million barrels a day as our production, we're nowhere near that now. I would love to find someone who could actually give me an accurate reading on what the number of barrels produced per day are as of right now. My guess is you're probably, I'm taking this total flyer here, I would probably say you're down probably less than 5 million barrels a day in the U.S. now. Now remember, there's multiple layers here. You have obviously the shale and the fracking, and you also have offshore, right? Looking at deep water drilling, which we've been doing too. That's also getting squeezed, and some of those plants are going offline. Mexico made an announcement last night saying that they were going to cut spending on offshore because the profit margins just weren't there anymore. We're probably going to see that start happening here. So as this goes on, and you have the U.S. with their shale and fracking industry having problems, you have offshore deep water issues with Mexico and U.S., what's going to happen to supply? Supply will continue to diminish. So what's interesting is we have this crazy wave of events going on right now, right? You have demand, which was looking nice, slowing down maybe because of electric vehicles and supply, but now demand has just gone off the cliff. You have supply, which was kind of going up slowly. It's still going up slowly, but ultimately what's going to happen is supply is going to drift back down. And I didn't have time to make charts here for you guys, but I think it's going to be a really cool visual to draw what's happening with demand and supply now and then come up with a forecast. Because here's what I think is going to happen. Actually, no, that's part 3. I'll go out to part 3 here in a second. The other side of this is we have storage facilities which are full. I saw someone make a funny comment earlier about, does anybody know any super tankers or have any super tankers lined up? Hell yeah, if you had a super tanker or massive storage facilities, you can make yourself a millionaire overnight. A gazillionaire overnight. Like huge overnight. And I'll explain that here on part 2. So that's where we are. What you'll start to see also is not just the slowdown of supply in the U.S., but it could happen from Mexico. I think Saudi Arabia and Russia will probably as well step in again and do more cuts. But you're also going to see bankruptcies, and a lot of bankruptcies. We talked about Occidental Petroleum last time, or 2 times ago when Bill Addis was on the show. They all of a sudden got downgraded to junk because analysts felt that they cannot make their obligations on debt. And if they're not having any income stream because the cost of oil, it's costing them more to take it out of the ground than they can sell it, they have no income and they can't service their debt. So what you'll start to see are bankruptcies in this space. Most likely it'll be the smaller firms, those like ExxonMobil, Chevron, Conoco. They'll probably survive it. They'll probably weather that storm. So expect to see a lot more bankruptcies in high debt-laden small companies in the oil industry. If you were a researcher and love the fundamental side of things, you could be digging in there and find all that information out. Oh, I forgot to hit start recording today. Sorry guys, this recording's gonna be late today. Darn it. How many barrels can you fit in 1 acre? Remember, if you're doing one-dimensional, you can probably fit maybe one barrel if you were to pour it out on your acre, and it'll spread out. It's the vertical that's the key. Okay, so step number 2 is understanding how what happened today actually happened. And to me, this is a rather interesting chart, and I'm going to show you some charts here. We started with looking at, I've been on that screen the whole time. We started with this bad boy right here. And if you look at that chart or this picture, it's not really pretty. I mean, obviously you can see it's 0. You would think that oil's not going to go less than 0. It happened not because of supply. It happened not because of demand. It happened because of something else, which is a phenomenon in the financial markets. Normally it's done with what's called a short squeeze. So let me explain to you what a short squeeze is. I know many of you do understand this. Some of you have no clue what a short squeeze is. So bear with me as I try to explain this. Obviously, for those who might be new, you have what's called going long and you have what's called going short. Going long means you buy it, it goes up, you sell it at a higher price. There you go. You buy low, you sell high. Going short is where you actually sell it first. The order of operations are backwards. So with long, remember, you bought it first, you sold it later at a higher price. With shorting, you're actually selling it first at a high price and buying it back at a lower price. That's your goal anyway. So if we look at what short squeeze is, basically what will happen is somebody will become very bearish, or you have some analyst out there or just a group becomes very short on a company, meaning very bearish, and they start shorting the company, meaning they are selling their share or selling shares of this company with the intent of it going down, and they buy it later. At a certain point, there becomes so many people short, meaning they're betting it's going to go down, that any real action to the upside squeezes them. And what is that? What does squeezing mean? So let's say I look at something and it has 30% of the shares right now are short, like Nordstrom's, right? Nordstrom's right now has 30% of all of their shares are short. That's a huge number, guys. Normally you'll see maybe a 3 to 5% area like that, but 30% is massive. So what I could do if I was an institution is I could come in and I could collaborate with a couple big banks and say, listen, guys, on the 21st of April, 2020 at 1 p.m. Eastern time, right before the close, I want everybody to just start buying. And everybody commit. I want you all to commit $20 million worth of buying on Nordstrom's. What do you think is going to happen to price? I actually changed the latency, so I should be able to get some feedback here. What do you guys would think would happen to the price of Nordstrom's if I had 3 banks, each commit to buy $20 million, or 3 major firms, each commit to buy $20 million. That's $60 million worth of Nordstrom stock, and 30% of the people think it's going down. What do you think is going to happen to share price? Let's see how latent our lag time is here as I'm asking you guys a question. Yes, Brent, I'll talk about them calling back those shares. Not only would it have a huge... Remember, you're going to have a double spike. Your first spike would come even in a normal market where nobody's short. You come in with $60 million to buy within a 3-hour window in the market on any security, it's going to have a huge spike up. But here's the other part. Those people who are short probably have stop losses. Remember, they already sold, so what do they have to do to close their short position? They now have to become buyers. They have to buy to cover. So you get the pop from the initial shares from the banks manipulating it up, but then you also have the panic short sellers going, oh shit, I got to get out because this thing just jumped 15%, 20%, 30%, and all of a sudden it moves even higher. Also, your broker, and Brendan, thanks for pointing this out, brokers can, if they want, call back your shares, meaning you can, let's say you're short, your broker can at any time say, we want those shares back right now, because when you go short a stock, you are borrowing from that firm. You're borrowing from your brokerage firm those shares. So let's say I was short, Nordstrom's. Whatever broker, let's say I'm an E-Trade customer, I'm borrowing them from E-Trade, who is taking them from one of their clients' accounts, loaning them to me so I can sell them. At a moment's notice, they can call those shares back, and I'm forced to buy back, Okay, that's a short squeeze. Here's the phenomenon that happened today and why you are seeing negative $40 per barrel on oil. Let me bring up TradeStation here so you guys can see the chart of CL today, because it was the CLK contract specifically. So let me go CLK 20. I'll share that with you guys so you can see it. I'm going to actually bring it up on a 5-minute basis and show you. It's soaring right now. I mean, this thing has got so much volatility. Literally, it could literally snap your neck with volatility. All right, ready for the show? Check this out. Here is CLK 20 contracts. Now, if you are a futures trader, you have to know something. You have to know that crude oil is a physical delivered commodity. What does that mean? S&P is cash settled. So when the contract expires, you just take the difference between what you bought it at and what you sold it at. Profit or loss, that's yours. If you bought crude oil, and if you look at this chart here, you have, let's say you bought it last night before the close at $18 a barrel on the CLK 20. Basically what you are committing is, if you hold this through expiration, you are buying 1,000 barrels of oil at $18. That's what you are committing to do. It's a deliverable product. They could literally come to your house and say, here's 1,000 freaking barrels of oil, fill up your pool with it. It's a deliverable product, and if you hold it past a certain time, you are on the hook for delivery. So what happened today, and this is why it's important to look at what the interest is in a futures contract. You had a ton of people who were long crude oil. I'm one of them. A lot of people are saying, look, in the next 3 to 6 months, crude oil is going to soar, for sure. It's just when. So all these people who are holding CLK 20 today long are all of a sudden coming into this deadline tomorrow, that if they are holding that contract at the close of business on Tuesday, they are now on the hook to take delivery for 1,000 barrels of oil. Now, if you have the facility and you can store 1,000 barrels of oil, shit, 18 bucks is cheap. Well, look what happened when it opened up this morning. All of a sudden it opens up, it's at 17.75. And then all of a sudden it falls from 17 to 16 to 15. You're thinking, holy cow, this is brutal. Now, I'm going to keep scrolling forward here because I saw somebody tweet out earlier going 10 when it was at 10 bucks. And they're going, this is the lowest of you're ever going to see it ever. Really? Oops, sorry. Watch as I scroll forward. I'm going to do it a little by Clik so you can see a little bit. Boom. We get back down that 15. We bounced once, tested it. And as soon as we broke through that $12 mark, it was off to the races to the south side. Here's oil now at 12 bucks. I saw a tweet out today where someone was saying crude oil is a great buy at 12 bucks. I bought CLM, which I'm still holding. I bought that one at 23, so definitely underwater on that bad boy. But here you have the continued slide, and I'll let it keep playing here because all of a sudden, this is where crude oil is at right now. I'll go through right so you can see where it's at currently. This low candle here is negative $40.32. Negative 40. How the hell does that happen? And this is why I posted on Twitter, and it'd be great if you guys went out and actually commented on that Twitter post. I posted, how many hedge funds do you think by Friday will have declared bankruptcy and said that they're done? I think you're going to see in the news in the next few days, there's a lot of hedge funds going to be going, we're sorry, we had that CLK contract and we lost everything. Here's what happens. It's a long squeeze. Remember, when I said short squeeze, it's institutions or big money looking and saying, there's a lot of people short this stock. Let's take it up because we have the power. It squeezes them out of their trades, and then we can bring it back down. So what happened here is the exact opposite. What makes this unique is with stocks, there's no end date, right? There's not like your stocks expire on Thursday. This futures contract that we're looking at, which is the CLK20, expires tomorrow. So again, if you're holding this at expiration, you now will be on the hook to buy 1,000 barrels of oil, which if you have the facilities to store it, this is awesome. Here's the challenge. All of a sudden, the entire financial world knows that this contract expires on Tuesday. And they know that supply or all the facilities for storage are packed. They're maxed out, right? There's nobody buying oil, so all the places to store oil are full. So if you're currently long that contract, expecting to take delivery and get this amazing deal on oil, you've got no place to put it, but you're still on the hook for it. So what happened was a bunch of people who were long this were like, oh shit, I got to get out. I need to get out of this contract. And everybody else is stepping back saying, I'm not touching it. I'm not buying it. So we went all the way to zero and then went down to negative 40, which in essence means that if you were to buy this contract and hold it till tomorrow, someone would literally pay you $40 per barrel to take crude oil. So if you owned a super tanker, which is kind of crazy, if you owned a super tanker and you had this storage space, you could make yourself probably an instant millionaire. Now, I'm not 100% sure on the way that would work because it seems crazy that someone would pay you $40 a barrel to take that off your hands. But from the way the futures markets work, that's the way it should have happened. So these guys right now who are trying to unload their May contracts on CLK can't do it. There's nobody out there to buy them, so they're basically just dropping their prices, just attempting to get out because last thing you want to do is take delivery. I'd rather take a big financial loss than all of a sudden sit on 1,000 barrels of oil per contract. I have nowhere to put it. Now I have to go find some kind of storage facility or just pay them to take it back, right? It's a really weird, crazy situation. Yeah, I agree, Karen. It's sort of crazy amazing. It's a black swan event. It's a black swan event that for sure is going to impact a lot of firms, not just hedge funds. There's going to be some hedge funds that go out of business, but there'll be a lot of oil companies that go out of business because of it. How about strategic oil reserves? Oh yeah, Congress can't get so who is buying up at negative 4? Yeah, that's a great question, Mike. I don't know. My guess is it's major oil companies. It's my guess is because if I had a way to buy oil at negative $40 a barrel and I'm literally earning money by taking a commodity that I may use, that seems like a win-win. So, Nick said, how does this affect the USO ETF? It could affect it significantly. I haven't even looked at USO today. Remember, USO is simply forward futures contracts. So my guess is they were already out of the May. They shouldn't have been holding this long. I mean, unless you want to take delivery, you have no business being in a contract expiring 2 days from now. It's just stupid. Most of the volume isn't even there anymore. It's going to be on the next contract, which in this case is the M. Brian says, yes, fill the U.S. strategic oil reserves. Wouldn't that be great if our government stepped in here and all of a sudden buying all the oil they could at $40 a barrel? Our strategic oil reserves are full. That'd be amazing. Not going to happen. Our government couldn't do that. So I was going to look at USO for you guys. So does that, by the way, I know I went on a long rant here, but does that make sense on how this really wasn't a supply-demand issue that happened today? Clearly, the sell-off in oil, period, as an asset class is because of supply and demand issues. But the move, why we saw a negative 200% drop in CLK20, that's not a supply and demand issue. That was a long squeeze. That was people trying to get out of their positions, and they can't. Nobody wanted to buy it. If that makes sense. It's the equivalent of having a home for sale, and there's a wildfire that's burning. It's like a 1,000-foot wall of flames 100 feet from your house. And you're like, okay, 300,000. Okay, 100,000. Okay, just take my freaking house. I'll pay you to take it, right? I mean, it's that type of situation. These poor guys who were holding CLK20 going to expiration just got absolutely screwed. All right, what else? Is there some broker will allow you to trade the K contract? TradeStation emails us. Yes, there are certain firms out. Koja, good question. Yes, there are firms out there that will allow you to do it. Now, generally, you have to have a relationship with them and things set up in place for you to take delivery. From my understanding, because I would never trade that late anyway. I never want to take delivery of any commodity, so I want to make sure I'm out. But from my understanding, if you are going to be taking delivery, they let your contracts go past a certain point, that you have to have some sort of setup where, okay, if you are going to take delivery, you need to let us know your channels ahead of time, because you are going to get delivered this stuff at some point. So cool, good. I'm glad it helped understand it, because I think it's kind of tricky when you read the headlines out there today. People are thinking that, well, we had negative oil because, oil is terrible and it's a bad commodity. No, oil will not go below zero price-wise as a commodity. It's specifically this contract. And it's only because the people that were holding it, they don't want it. They do not want to take delivery, and they cannot get out. They were absolutely trapped today. It was a really interesting trap situation, which I think brought down that price today. So, all right. The global market, yeah, TradeStation sent out a notice. Oh, did they really? Was it today? Huh? For your futures guys, just make it a point that, the week before expiration, and crude oil expires it's 3 business days before the 25th, right? I know it's a weird strategy. 3 business days before the 25th is when crude oil contracts expire, and that's every month. So if you know that, just tell yourself, okay, the 14th of the month, I'm just going to switch contracts and go to the new one. And you can see the volume on it. Let me see if I can bring up some differences here and show you this real quick. It might be a second. Let me see if I can do this. Since I don't have my chart master here, and I got to be careful with how I draw these charts, etc. So let me move some stuff around. Give me just 2 seconds here. Copy that window, paste it up here. All right, so I'm going to try to bring these up side by side, and I'll show you one of the main reasons why, or how you can tell when you should be getting out of something. So here is the .D. So here's your daily for, I'll bring up CLK20 at the top. Oops, CLK20. And then down here I'll have the CLM20. Oops, CLM20. I put CL. So you can see the chart's just a little bit different, right? Now let's add in volume here, and we'll go into analysis technique, and I'll throw volume on here. Always takes time. I should have done this before the show, but my bad. Okay, it doesn't look that great. Let's see if I actually have it set up over here so I can show you volume. And if you have questions, just go ahead and type them in. I'm going to try to look down here at the bottom as I roll through these and slowly build these charts out for you. So the CLM20, the volume actually has not been that high. Today it was the big high volume on it. It was 400,000. So people were still actually rather actively trading. But you'll notice that as we get near the end, you see, like today, let's go the last week, right? When did CLK move above, or CLM move above CLK with regards to volume and transactions? Well, let's see. This was the 15th, 16th, so this is, I'm going to get the dates right. So there's Monday, Tuesday, Wednesday, Thursday, Friday of last week. It looks to me like right around, it was Tuesday. Monday, Tuesday, Wednesday, no, Thursday, I'm sorry. Thursday is when it really switched, because Thursday, CLK's volume went from 550,000 to 240, and you look at CLM, went from 375 to 439. So that's really where the transaction happened, was last Thursday. But you could be out before that. I mean, to me, it's just not worth ever pressing and making that kind of dangerous move and holding, because and I'm hoping that all of you can see that chart that we saw today and see how dangerous that could have been. Could you have lost every single penny that you have and then some? Yeah. My guess is if you were holding CLK20 today, your brokerage firm force closed you out on a margin call. It would have happened so fast you wouldn't even know what happened. Let me bring that chart up again. And what do I mean by that? Tough part of trying to do my own shows and all the editing. What do I mean by that? Well, I tried to put this little line here at 0 so you could get an understanding of where the 0 line was for CLK. And if I zoom out here, if you own this thing, let's say at $15, depending on how your account was set up, you would get margined out. You probably would have been stopped out at $10 or somewhere else in here. How somebody could let this thing get so far against them, it means that they had deep pockets. And that's why, I posted on Twitter that I think it's the hedge funds that you're going to see go blowing up here. And we'll probably see, my guess is you'll see a few of them here in the next few days. Certainly by the end of the week. Yeah. All right. Any more, any questions on that? I'm sorry. Buy Boeing? RDPL says buy Boeing. I'm going to have to say no. And that's just my macro crazy view on this one. But let's go to BA. And here's why I'd say no to buying Boeing. At least for now. Airlines have a ton of airplanes. And I'm willing to bet you we have enough airplanes right now to handle all of the demand that comes out for the U.S. All of it. Without question, we have enough to handle all of the demand right now. Because there is no demand for airlines. So why would United, American, or any even international company want to buy one airplane from Boeing when we don't even know what the future holds? So I think Boeing's screwed for a while. My opinion is rather skeptical on us returning to a normal type of life where all of a sudden we are, flying, grab a plane for the weekend and go here, go there just because we can. There's a little air of caution I think most consumers are going to have. Now, even if we get to the point that we get a vaccine for this, there still will be people that are going to be permanently scarred and fearful about crowds. Agoraphobia at its finest. I think you're going to see that happen more and more. So I think for Boeing, it's actually going to be damaging. And you're looking at the price chart right here. Technically, I love this pattern. Maybe I'll do a show on patterns because I am a big pattern guy. But you have right here what's called a pennant formation. A pennant formation is basically where you have a long pole, right? There's this big aggressive move, 74% slide in the price of Boeing. Whew, that's a toughie there. That's why you're seeing the Dow get hammered so much. But then you also have a small symmetrical pennant formation. And this is on snap mode, so it's not working great, but we'll do my best. I'll go from there. And, for ballpark, you have this formation right here. Don't worry about the percentages. This is just showing you that there's a consolidation right now happening on Boeing. Now, that big downward move, to me, that's what's called your impulse. That generally leads to more downside move. So even though it's at $143, and is a great company, guys, there's nothing against Boeing. It's just we have to look forward to the future and see how does all of this help us, and how can we, potentially make investments off of it. So Ed O'Neill did the right thing and asking that question, because here I am just rambling as I tend to do. Chelsea wants to see a chart on patterns. Fine, we'll do a chart on pattern, or a show on chart patterns, because I'm a chart pattern fan. So let's go back to CLM20. And real quickly just say, what's the future of oil? The future of oil is easy. It's very easy. I know. You're like, whoa, really? Hitting record, turning the speakers up. Oil will go up. I just don't know when. There you go. That's my future prognosis. Oil is going to go up, without a doubt. You're not going to see $20 oil barrel for the next few years, right? It might go down to the teens. Could we see it at 15? Could we see it at 10? Yes, you could. I think as soon as we get this lift, as soon as we get our governments, our president, our governors, our states to say, okay, you can now go out and go back to normal lives, we're all going to be in our cars driving. I think most of us would agree. And give me a yay or yes or no. Are you guys going crazy sitting at home? Is it absolutely driving you nuts? Or is it like, hey, I'm antisocial anyway. I'm an introvert. This is great. What do you think? Yes or no? You're going nuts. Because I'm going crazy, and I actually go out. Right after the show, I'm going to Back Bay, and I'm going to take my dog hiking. I have to get out. But I think some people are losing their minds. I have friends in 500 square foot apartments that haven't left their house for a month. That is like solitary confinement, and you're going to start to go crazy. So I think as soon as this is lifted, people are going to get in their cars and drive. Even if it's just a drive to the mountains, just to stop, smell some clean air, and go home, oil will be consumed again. That demand will start to kick in again. I love the staycation. I'm a fan of it too. Nat, I love it. I'm an introvert and I'm going nuts. I think so too. I love getting out. I'm fortunate. I have a nice place here in Southern California with a nice backyard, so that's great. But I have friends with apartments that they're losing their minds, And yes, I think we'll all go out and be more active. That could be a week away, a month away, maybe longer. But as soon as that happens, then you'll start to see crude oil start to move back to the upside. That's my assessment. I don't think you'll see it hit 50 or 60 right away, but it will stop its slide. And I think that would be that point. If you hear about them saying they're going to lift the restrictions on us, then it's probably makes sense to look at something long term. And what do you do? I saw a lot of people here going, USO, forget it. I'm staying away from USO. Yeah, USO not looking good. It's probably going to get delisted here if it doesn't do a reverse split. I made a $5,000. I took a $5,000 wager on USO where I bought 100 calls at $9, and I'm not going to see any money on that one. That thing's just going to expire worthless. But USO is what I am in. UCO, bring up that chart. I don't know the mechanics of this is an ultra, this is a double. Yes, you could. It's dangerous. It's really dangerous to buy into something that's a leveraged ETF. And this is ProShares Ultra, which means it's a triple. So, what I want to be careful of here is if you guys are looking at playing long and you look at something like UCO, I would be very cautious because the problem you're going to have with UCO, and a lot of people look at it and say, oh, it's $1.30. And I apologize, my fonts are real small because I usually don't use this one for the show. This is kind of my trading setup here. Let me just real quickly change some fonts here. Because you guys can't see any of these numbers, can you? So why not show you some numbers? So we'll go font, bump that up to 16, and this should help you guys all see the numbers. Hallelujah. A little better? Yeah, I agree. USO is not good. I've never liked USO. Unfortunately, there's not too many proxies for oil. They could do a reverse split on UCO. So when you look at this and you say, wow, it's really cheap. It's $1.35. I'll buy it. Remember, they could do a 10 for 1 reverse split, a 50 for 1 reverse split. They'll have to, otherwise they get delisted. Sub $5 stocks generally get delisted after a certain amount of time. So there will be a reverse split on UCO here soon, unless something happens. I believe it's 30 days they have to get back above a price threshold. Let's see, what else do I got? I got USO, 170 days. Yeah, I have the Octobers as well, but I bought mine. I bought mine when we first gapped down to 5, or not 5. Let me go back to USO. When we were really falling, I think it was when it hit 6 or 7. It might have been the $7 mark. I bought the 9. I think it was the 6. And I bought the 9s, and I'm not going to see any return on that. That was a flyer, and I'm okay with that. All right. Any last minute questions out there? I know this was supposed to be mainly focused on crude oil. It's not the death of oil, guys. Oil is not done. This is just a black swan event on one futures contract. And this is why it's so critical. One of the things, when I was teaching, you always want to make sure that you understand a contract. Don't trade something because, my neighbor told me about this, I'm going to trade it. If you got caught in that CLK contract and you were holding it thinking, it's just going to expire as cash, you might be bankrupt. You could literally find yourself being bankrupt with how fast it moved today. So you got to be really careful with these contracts. Always make sure you roll and start actively trading on the newer stuff so it doesn't catch up guard like it did here. Do you think oil downturn could trigger equities to go down despite the stimulus? Sure. I think it's a bit more than just the oil downturn. I mean, think of all the tertiary impacts of crude oil. If you have fracking companies shutting down, not only are you seeing people out of work, but you're seeing lack of consumption of all the goods and services from those oil companies and their significant consumption. All the little tiny towns that have sprung up because of those fracking companies, basically built little cities in some areas just for that. That whole ecosystem, that economy will just dissolve and disappear. The longer it stays down with cheap oil prices, the less likely those economies will come back. So they may have to start up somewhere else. So I think that there's a lot of impacts on this. I think that certainly the oil prices are a factor, but it's just the overall uncertainty, lack of consumption that you and I are making, lack of travel that you and I are making. That's what's going to end up hitting the income statements here in the near future. Tarja says, or gold. Brendan, so which will the Fed let die, the dollar or equities and bonds? Well, they're not concerned with the dollar. They'll kill the dollar, because the average American, the average person doesn't understand that their dollar just loses value almost every single day. What they are aware of is the equity markets. We remember that the equity markets dropped, 30% in the last month. We don't remember how much the dollar's dropped. So I would say to that, they'll let the dollar die. They'll just print that thing into infinity. They'll keep the equity markets going. Great question. And then the other man was asking about gold. Yes. Gold certainly is a great place in this market, I think, especially if we start to see more of a systemic collapse. Sorry, Jorge. We covered a bunch of stuff today. Yes, I would say short the dollar, but let me bring up a chart of the Dixie here. $sign DXY. Maybe if I get that on this account. So here's your weekly on the dollar index, okay? You got to be careful here, because you guys know that I'm a trend person, and I look at this and I say the trend is your friend to the bend at the end. Right now, if you're looking at the dollar index for the past 2 years, it's been up, and it's been a fairly nice up move, except for this little blemish that we had starting in February, this crazy rock and roll volatile swing. So I am, for now, I hate to say it, I'm still bullish on the dollar, and you have to understand why. This is the dollar compared to other currencies. And mainly it's the euro. This dollar index is the dollar compared to, it's a basket of 5 or 6 different, I think it's 5 different currencies, but the euro is 50% of it. And obviously the dollar's been doing well against the euro, so you're going to see this trajectory move up. I'd be wary on shorting the dollar. There's other areas you could go into, just dollar futures and other assets, but to me, it's really about market timing. I do feel bearish long-term on the dollar, long-term. But as John O'Donnell likes to say, right now it's the prettiest horse at the glue factory, right? It's the best looking one. None of them really look that pretty, and they're all going to end up getting slaughtered. But right now the dollar looks the best. All right, I gotta go. I got a hike waiting. Natural gas. Let's see. NG. I don't trade natural gas because here, the truth of the matter is I don't pay too much attention to the seasonality of things. Don Dawson, who I'm going to reach out to here probably today, is going to be on the program. Well, I'm hoping to get him on the program. He is the resident expert in natural gas, in my opinion, and he's just extremely knowledgeable. I've got a couple others that are really good natural gas guys. One actually guy just traded natural gas. That's all he traded. They're much more keyed into the seasonality. I'm not, and I don't pay attention to that stuff, so I don't want to get caught off guard buying or selling with supply and demand, which is what's more important to me than the seasonality. And that's the tricky part with commodities, guys. When you get into corn, wheat, soybeans, and all these other commodities, you kind of have to change your focus a little bit. It's no longer about exclusively supply and demand. You have to take into consideration seasonality, relative strength, macroeconomics, the weather patterns and things like that. I just don't have time for it, so unfortunately I can't make that call here on natural gas for you. But it looks so cheap right now, doesn't it? $1.93, under $2. I've had other guests on the show that have said under $2, they're a buyer of natural gas. So take that for what it's worth. I'm not my area of expertise, so apologize, but I will move away from that when I can. So I think I kind of answered this question. This is a question that came in. With the price of oil today, I'm looking for your suggestions as to what either stock or options you would have with regarding extremely low price of oil we have today. I appreciate your time and consideration of this question. I am open to active trading ideas. Active trading, I would just say keep trading the futures. Hell, the futures markets have been phenomenal. There's a ton of opportunity with these futures contracts on an intraday basis. I mean, today alone, you had, at one point, crude oil was down almost 20% on the M contract, not the K. So there's a bunch of opportunity out there. It's just you got to be careful with them. Other than that, you could use leverage ETFs or regular ETFs. You could also be buying call options on some of these ETFs or futures. You could buy call options on crude oil futures, but I would certainly give yourself some time, because until we get out of this funk, this stay-at-home thing and none of us drive, there's really no reason why crude oil should start to mount a rally. Even if OPEC cuts production, OPEC plus, let's throw Russia in there, even if they cut production numbers again, like another 10 million barrels, it's still not going to have a colossal spike in price because demand is not there. We need demand to help drive those prices to the upside. Yes, futures, the risk is absolutely massive. Right, absolutely. So, what do I have last part here? All right, so let's real quick, just so you can see what's coming out tomorrow. We have some exciting earnings coming up this week a little bit later on, like a lot. Yes, a ton of earnings. This is some of the big names coming out tomorrow. You guys see Lockheed Martin, you got Coca-Cola, HCA Healthcare. Some of them, those are some of the bigger ones. You have Philip Morris is also coming out tomorrow, SAP. And I kept Travelers down there at the bottom. I tried to sort this by market cap to get the biggest ones, but unfortunately, it doesn't. The site I'm using doesn't give me that ability. So this is what's happening tomorrow. Some are before the market opens, some are after market, but just wanted to give you guys a quick heads up as to what the earnings calendar is for tomorrow. All right. As always, I would encourage you guys to, if you have questions, put them down in the chat below the video on our YouTube page. Again, those are the ones I'm going to try to get to first. I won't have a guest tomorrow, so I'll probably do more just Q&A. I have a ton of stuff to get through, and now you guys have been sending in a lot of questions. So I'll do a Q&A session tomorrow, or at least try to catch up on some of them. So if there's something specifically you want me to address, put it down under the YouTube video for today's video for this show right here, just down below the bottom, and I will get that one up as soon as possible. So there you go. For those of you who have other questions, comments, suggestions, I know I've been working a little bit to get some of the comments that you guys have made fixed. For example, they're right around half hour through the show, there was a huge bell that came through from a trading platform. So somebody mentioned that one. I fixed it. I'm going to continue to do that more and more. So questions, send it in at TraderMerlin.com or go to, or just email me at TraderMerlin@gmail.com or go to the YouTube page. All right, guys, that will do it for today. Thank you so much for joining us. Thanks for the participation. I apologize if I didn't get to read through all the comments. And bye, Katie. Thanks for joining us today. She's probably poolside with a Heineken up in Northern California today. So again, thank you guys so much. I will see you tomorrow. Take care.